Hello, everyone, and thanks for taking the time to review the Santa Clara County, California real estate market analysis for June of 2008. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California. I'm also a member of the National Association of Realtors and a certified ePro. And as of this month, I am the president and CEO of Whitelaw & Sons Real Estate Services. And I look forward to helping all of you out there with your real estate needs in the coming months and years. Now, to celebrate the opening of my brokerage, I wanted to make a special offer to folks out there. So I'm offering a 25% rebate to buyers. This offer is going to be available until August 31st, 2008. You do not have to actually buy any properties before August 31st, 2008. You just need to contact me and reserve your 25% rebate. Now, what this basically boils down to is if you purchase a home, you get 25% of the stated commission for the buyer's agent will be rebated back to you, the buyer. And that's for the average priced home in Santa Clara County, that is thousands of dollars. I think it's a great opportunity for folks who are looking at buying who might be on the fence but are maybe concerned about price and want to get a little bit of a boost as far as their ability to purchase something, and I hope this helps. Now let's go ahead and look at the numbers for supply and demand for Santa Clara County. First numbers coming up here are the sales numbers, and we'll see here that it's not great news, but at least it's not horrible news. And I know that's been a distinction that we've been making over the last few months. Not that we've been talking more about how bad it's getting, how quick, versus it getting actually better. It's sort of a similar discussion this month, but let's go ahead and review the big numbers first. Now, the first thing we'll talk about here are the sales figures. Now, sales are actually down 5.6% from the same time last year. And remember, this is the month of June going back to 1999. So this is just, there's no seasonal influences here. This is just a month of June going all the way back year to year. And between 2007 and 2008, sales down 5.6% for a grand total of 927 homes sold in Santa Clara County. Now, between 2007 and 2008, the number of homes that were listed in June was down 0.8%, so almost 1%, for a total number of homes listed of 1,977. Now, the inventory for Santa Clara County for June of 2008 was up 34.9% from the same time last year, and that gave us a grand total of 6,076 homes currently on the market. Now, let's go ahead and look at these and see what we can learn here. The good news is that numbers that are typically good numbers we like, the sales numbers, haven't continued their descent at a rate that we've seen previously. Now look at everything from 2004 all the way to 2007, a pretty marked drop each year. This year that trend stopped. Now still, it is a 5.6% decrease, and we would rather have seen either less than that or an increase in sales, but at least the tendency towards big drops each year has slowed. So we're seeing a slowing in the bad news as it relates to sales. That's a good thing. Now, some good news is that the number of homes being listed is down. Now, this will help decrease our overall inventory, but I think fewer homes coming on the market is a good thing, and the numbers this month reflect that. Now, just as we've talked about in previous months, the inventory numbers are, of course, at all-time record highs. So where can we look to see what we might expect? What's happening? What's the tempo of the change? What's the rate of the change? Now, previously increases from 2007 to 2008 in the inventory numbers, or at least in the last part of 2007 compared to the same time last year, or in 2006, the rates were pretty big. Last month, I pointed out that rate had come a little bit slower. The amount that it was increasing compared to previous years that it increased was less than usual. This month is following in with that trend, but not as much as last month. So if you're scheduling this out, it was much, the gradualness of the change had flattened a bit. This month a little bit less so. I don't know if we're going to get a trend out of that, if we're starting to see a return to a more dramatic increase in inventory. But the short-term numbers are encouraging. So I only point this out now because I think it'll fit in well with what we're going to talk about in a minute as far as the short-term numbers. All right, so the short-term numbers. This is going back to March of 2007. and see the usual seasonal influences here on sales. While these are coming up, let's go ahead and talk about some of the numbers. Now, before we actually move on to this, relating to the inventory numbers in the last slide, if we took the total number of homes in inventory right now and it froze, and we took the total number of homes that sold this month and froze that, it would take us 6.5 months to sell the entire inventory off. Another way of thinking of this number is that for every home that sells, there's about 6.5 homes on the market. Now, that's actually good news. That's down from previous months. We've seen months where that number is good. Call it a healthy number, though, until we're below 6. Probably closer to 5 would be the actually almost tolerable. That would actually be good. So let's take a look at what the changes are now. We're going to discuss just the percentage changes between May and June of 2008 right now. The number of homes sold was up by 6.2%. The number of homes listed was down by 6.9%. And the inventory was down 0.9%. Now, there's a couple of rays of hope in this particular graph. I know it doesn't look that way when we see the inventory steadily going up. But let's take a look. Let's do a little comparing here. Now, between May and June, let's start with sales. We see sales increasing between May and June. That's good news, because between May and June last year, we didn't see that. We saw a flattening or actually a decline in the sales as our summer season came to an end early. Last year, our summer season really officially ended as far as being defined by the numbers in June. We didn't really get what we wanted out of July and August. The volume of sales just started declining as soon as we hit May. This year, not so. This year, we're seeing June numbers looking actually all right from a number of homes sold standpoint. That's good news. Other good news is we are seeing the number of homes listed go down when compared between May and June. That's a good thing. Between May and June of last year, we saw the same thing at almost the same rates. Look at that. It's almost identical numbers. So at least we're seeing some static performance on the number of homes being listed. We're seeing very, very similar numbers to last year. The greatest news is coming from the inventory this month. And I know it doesn't look that way given how high it is, but look at the number of homes in inventory in May of last year compared to June of last year. We saw an increase in those numbers. In fact, if you look all the way back to March of 2007 and then look at the trend between March and June, look at what we had. We had a very steady increase. But now look at March to June of 2008. We saw a pretty big jump between March and April, but then it was relatively flat to the point where after May we actually have seen a decline. That's very good news. It bucks the trend we saw last year. And of course, whenever we see things that buck trends, I want to know why. And since this is a trend that works in our favor, this could be the very first signs that we're seeing the market start to turn, where the inventory numbers are starting to get more and more manageable. And the bottom line is, it's the first time we're starting to see the sales numbers, the number of homes sold, and the inventory numbers heading towards each other. And that is a good thing. That is a very good thing. So if this trend continues, or at least obviously there's going to be seasonal changes over the coming months as we start to leave summer, head into fall, and then into winter. If this trend holds as something that's happening in the market in general, that'll really benefit us in next year's market. And of course, for any sellers trying to get things going after the quote-unquote season of summer, it might work in their favor as well. But it really depends on how much this goes down. But like I'm saying, this could be an indication of the first pivot point on the market. And remember, the last time we talked about a pivot point was way back in 2005, 2006, when we started going in a very bad direction. So we'll see how things work out. I think this is encouraging, but of course, only future data is going to verify whether or not I'm on the ball on that one. Now let's go ahead and talk home prices here a little bit. We've got some interesting numbers here this month, primarily because we're not seeing a continued month-to-month dramatic change. The big change is we've hit the bump, right? In 2008, the one thing we can say is in late 2007, early 2008, price was the one thing that hadn't changed that needed to change. And finally it has. I don't see this as bad news. A lot of folks out there are talking about this as bad news, but this is what's going to fix the market. For a long time I was saying something has got to give. Anyone who's listened to me for a while doing these knows that my mantra for a while there was something has got to give, and in my mind, it was either inventory numbers or asking price or sales price. One of those two things had to get changed dramatically before our market turned around. We've seen a big change in Santa Clara County. This is the second month of a big change, and I think it's actually a healthy thing. It's not off so much from last year that it's going to be a horrible burden on sellers, but at least it's going. I think it's something it's something we can manage. It's a manageable change, but I think it's going to overall have a great effect on the market. So let's go ahead and jump in and talk about the specifics here. Now, the average sales price in Santa Clara County for June of 2008 was $922,149. That's a change of 13.5% from last year. Now, remember, we've had previous months, and that's not great. I mean, it's down, so I mean, sellers are obviously taking a bit of a hit. But remember, we've got areas of Santa Clara County and Santa Clara County in general where previously we've been seeing 24% drops, 30% drops in some areas. So all of those numbers are a big hit for some sellers. But something had to give. I think we all knew it had to be the price at some point, and so here we are. All right. Now, the highest priced home in Santa Clara County was, once again, in Palo Alto. This was on Kingsley Avenue in Palo Alto, and this home sold for $10,500,000. It was originally listed for $12,500,000, so they had to take a $2 million cut in their asking price. That must have stung. And the days on market was 177, which is interesting. If you look at the other numbers for homes with this price range, this is one of those areas where the upper price, the higher end homes, the homes that are priced at the way higher end, and this home stood alone really at its price point. For a while there, we were seeing the market really start to hit those a little harder. Seems to have recovered a little bit for the higher priced homes, so which is a nice difference from the previous month. That's a change that we've seen between May and June, is that we've seen a return to a little bit more of equilibrium between the various levels. So the higher priced homes, the medium priced homes tend to be selling at pretty even rate now. We're seeing the same level of activity. Now, the lowest price home was on Linkhorn Court, and this is in San Jose. This actually wasn't the absolutely lowest price home. The absolute lowest price home sold for about $100,000 less than this, but it was way out in the Los Gatos Mountains, and it was basically a Jeremiah Johnson-style shack in the mountains. So I didn't put that one on the list because actually this one's a little bit more interesting. It's on Linkhorn Court in San Jose, sold for $249,900, and that's what its list price was. And it sold in 7 days. But it was a fire-damaged foreclosure property that was owned by the bank, which I thought was interesting. Whoever bought that, I think, got a great deal. So they'll be able to go in there and rebuild that home. And I think once it's all said and done, I'm going to keep an eye on this one because I think it'll turn around and sell, and whoever bought it's going to be a happy camper. So that's it for home prices for a year-to-year comparison. Let's take a look at the trends now. How have our home prices been doing just in terms of trends? Well, overall, it's hard to describe it as anything other than a steady decline. And if you have to have a decline, a steady one is best. We haven't seen huge, dramatic drops on a month-to-month basis, which is good. It indicates that we're not seeing a level of panic. There's been a pretty considerable drop, 13 points from the same time last year. But overall, it's all been pretty gradual. Now, if you'll look at the same time last year, March, April, May, June, you'll see we are taking a different trend here. Last year, when the market started to heat up for the quote-unquote summer season, April and May saw increases with no real drop in sales price until June. This year, we haven't seen that at all. We saw things normally we see December as the lowest point in the year. Now look at December. Relatively flat performance all the way to April. We saw a little bit of a boost in January, but that's really all we got. And we're still continuing to see a drop after April. So from April to May, it's down. From May to June, it's down. Again, something had to give. Price is obviously where that give is being provided, and we're just not getting the season as far as home price is concerned as last year. This market has definitely made the turn of understanding that sales price is what needs to go down. It is going down, and the change from May to June was a decrease of 5%. So are we going to continue to see these go down? Well, yeah. I mean, if we want to look at what the normal performance is, if we look at last year, I would expect that July will see some more of a decrease in price. It wouldn't surprise me if it actually is on par with the decrease we've seen between May and June. We may get a slight boost in August and September, and then probably more flattening after that. I would guess that there's the confidence levels are so impacted by the market that I think once we do see this dip end, and it'll probably end in July, that there it'll either stay flat, maybe increase a little bit, I'd guess flat, and stay flat as we saw last year. Now let's go ahead and look at the days on market. Again, these are big numbers, and we've seen a steady increase from 2005 all the way up to 2008. And again, these are just year-to-year numbers. So the month of June, going back to 1999, we actually have a 32.7% increase from the same time last year. So all the homes that sold in June, the average was 73. Now, with a huge sample of homes we've got, unlike when I'm doing these reports for smaller cities, so the homes that stay on the market for these unbelievably long periods of time are not nudging this number up or down enough to make a difference. So these are solid county numbers just because of the volume of data that we have. 73 is still pretty respectable. There are plenty of communities within Santa Clara County that are taking way longer than that. Nationally, not as bad as a lot of other areas. Statewide, still, we're actually doing fairly well. 73 days, so just a little over 2 months. That's actually fairly reasonable. It's not as good as it was previously. We'll see how it goes in the coming months, and the trends in the months I think you'll find interesting as well. If we take a look at those, we can see that we've got a lot of seasonal fluctuation here. So remember that we tend to see the days on market increase in the wintertime. That's definitely reflected here. Look at that nice gradual increase from October to December, where we peak out in January at 87 days. Let's go ahead and look at last year between March and April and see what we saw. Now, again, the season we saw last year was that the average home price was down. March to April, prices down, days on market down. April to May, down, and then an increase in June. We see an increase between May and June, but not as dramatic of an increase. Again, notice how this is a flattening. We're not seeing huge jumps. It's only a 3-day difference between April and May. It's only a 2-day difference between May and June. Nearly a 10-day difference last year between May and June. So we're just not seeing the huge fluctuations. Very gradual. If you've got to have a change that's a bad change, at least it's gradual, and that indicates, as I've said before, we're not getting a lot of panic. People aren't going crazy, but we are getting the correction that has to happen for the market to change. And these days on market are just a reflection of how many homes are in inventory, and people have so many homes to choose from right now. But we'll see this number go down as those numbers we talked about between the number of homes sold and the number of homes on inventory gets closer. It'll just by virtue of having fewer homes to choose from, homes that are on the market will sell quicker. We're nowhere near that point yet where we would expect to see a big change in that, just because those numbers are still pretty far apart. But it is a good sign. Again, another indication that we don't need to be entirely intimidated by the market that faces us. We're seeing slowing in areas that are good to see slowing in, because they're bad things. So keep that in mind as we move forward. We'll continue to do this on a month-to-month basis, as we always do. But I think it's all right for us to sort of sit back and say to ourselves, it looks like this out of control train is slowing a little bit and starting to get under control. Now, I appreciate you taking the time to listen to my reports on these markets. If you'd like to get in touch with me or view any of my other video presentations on the market, listen to my weekly podcast, read any of my articles, you can find those on my website at www.soldbyrobert.com. You can also contact me via email. I'm happy to speak with anyone via email, whether it's questions, concerns, ideas, or suggestions. Please send those to robert@soldbyrobert.com. If you'd like to call me and discuss real estate or anything else that you're interested in relating to what we've talked about here today, please feel free to give me a call at 408-852-0525. And if you're someone who prefers the online chat experience, I'm online every now and then, and you can reach me in AOL Instant Messenger, Google Talk, and Yahoo Instant Messenger, and my screen name is The Rebel Broker. You can also get me at Skype with screen name Rebel Broker. And finally, referrals are greatly appreciated. If you or someone you know is interested in buying or selling real estate in Silicon Valley, please consider giving me a call to see what I can do for you. Thank you very much. I appreciate you coming out, and I'll talk to you all next time.